Hi again, everyone. This is Joe Henches with Beyond the Chart, and this is the weekend technical analysis of the stock market today. Today is April 19th, Saturday, April 19th, 2014. All right, the Dow was down 16 points on Thursday, so we had the pause that at least I was expecting after especially three big move days to the upside. And it came right in at the dotted line that I had drawn for a right shoulder. And so this is going to be interesting to see if we get the turn down. It just looks like it. And in terms of a compressed day, the high-low, if you look at the range of the day here, this is what I call an NR7, narrowest range day of the last 7 days. When I get an NR7, you start to get on alert that you're going to get a big move coming as you start to get compressed days. Sometimes it might take 2 days in a row up in like this as you get to the top of a move, but you're going to get a move. So that's what we're kind of looking for. Let's look at the weekly. Basically, we kind of retraced almost everything we gave back last week, or that we lost last week and we gained it back this week, and so we're basically still we're going sideways. S&P 500. Not a whole lot new here to tell in terms of the picture. Doesn't really tell me a whole lot. The Nasdaq Composite Index continues to trend, lower lows and lower highs, downtrend. We've broken below this channel like I talked about. We came back on Wednesday, and we're basically hung right in there on Thursday. When you look at this on a weekly basis, this is kind of interesting that we've had 4 weeks below a 10-week exponential moving average, the blue line, okay? Whenever we've had that before, we've had maybe a couple more weeks of damage, or at least a couple more weeks of trading below the blue. Not all the time, but it seems like more times than not, it does happen. And if we go back to the top of 2007, it's almost like when you get the 4 weeks near a top, it's like that's the break in the strength that then signals, it's kind of like a sign that there's weakness happening. And then, you get a little bit of an up, down for a few weeks, and then you roll on out. You roll to the downside. Back in 2000, I mean, look at this move in terms of the trading below the 10-week. Then we got a little rally back. But then as they broke down below the 10-week again, wow, there she goes. And it did go. I mean, if you think 2008 was bad, this was really bad on the Nasdaq, back here. Losing almost 80% in that time frame, 2-year time frame, a little over 2 years. Okay. All right. So that's the Nasdaq, Nasdaq weekly. So, okay, let's take a look at the New York Composite. Rallying back, still kind of putting in the top. Potential shoulder in here also. I mean, you can't. It's realistic. This is basically the Russell 2000, basically mirroring the Nasdaq. So not a whole lot new there. All right, short-term trading index. The blue line starting to come down, but we're still in neutral territory. We're not at an extreme on the 10-day exponential of the short-term trading index. High-low, a little bit of a bounce back, but this bounce back has been weak. This move in here from April 11th through yesterday, this was actually 382 Dow points, okay? But you only got a net of 142 more new highs than new lows in here. This move was actually less Dow points, 309 versus 382, and you had more new highs. So what that's telling you is this rally that we had, even though it was more Dow points than this rally, it was a weaker from new highs versus net new highs in terms of new highs minus new lows. It was weaker in this move. So that's just one thing to as a sign of strength in the move. Okay. The VIX, where is the VIX? There we go. VIX has dropped back pretty dramatically, pretty low. So now again, when it starts to get this low, it could pop back out of it, but pretty good drop off. I actually thought we might get a run after the break of this trend line. I thought when we got a pullback, I thought it was a good chance we'd turn around and run like we've done before. back in here after some pullbacks, but didn't happen this time. Let's see. I want to look at the ETFs. Semiconductors could be topping out. I mean, again, potential shoulder, head, shoulder. We've pulled back. I mean, we'll have to see. We got this move down, up, down, up. If we take out this low, we're definitely in a downtrend and kind of confirming. And then let's see, it was the home builders. That's fun. Here we go. Home builders. Oh, they're right together. Now, this is also interesting from the standpoint the home builders could be doing a little fan line to the downside. Break of this line, trend line, pull back, come down, and again, you got a trend line in here. You break it, and then you pull back to the previous trend line. And if we roll over, we break this thing is going down, especially since this trend line is almost horizontal. So this will be interesting to watch. This will be a pretty negative signal on the home builders that that part of the economy is not looking good. And then the financial ETF, this looks like a little bit of a bear flag to me. Okay, I saw this very tiny little bar up here at the top. It's a doji. Again, it looks like an NR7, 1, 2, 3, 4, 5, 6, 7. I think that's a narrower day than that day. So the narrowest day in the last 7 days, and probably even more than that. But it looks like a little bear flag, so we'll see if we get a resumption of the downtrend. That's what I'd be looking for. And I think that's it on that. I want to go ahead and move to Apple. We're going to look at Apple, Tesla, and Twitter tonight. So Apple... Okay, Apple was up 5.9 points on the day and slightly up for the week if you look at for the last few weeks. So, but again, here's the thing. We took out this point here, okay, the 515.6. That point was broken, so we've gone to another lower low than here. So this looks like 5 little waves to me. I wouldn't be surprised to get a little bit of a pullback and then a resumption to the downside. We'll see. Let's take a look on a weekly basis. Here we go. On a weekly basis, again, not a strong bar. We've broken this trend line that we had in here, and not a strong bar. And still, we're somewhat sideways after all these weeks. We're somewhat sideways. So it's struggling. It's not moving dynamically to the downside. It's still trying to hold its ground, but it is not moving to the upside either yet. So you got to stay with the trend. The trend looks a little bit negative right now. Tesla's looking negative to the downside. Remember, I drawn this trend line. It's come down, bounced off of it. Not getting. I don't know if I don't think we might be getting a little bit of bullish divergence in here. The fact that this didn't go to higher high when it went to low. So we could get a little bit of a bounce off of this on Tesla. And if you look at it on a weekly basis, here we go. Yeah, it's a bounce off this trend line. That doesn't really tell me a whole lot other than you see the negative divergence in here on a weekly basis that tells you that this move was the 5th move and that's pretty much done. So I'm expecting it to keep trending down is what I'd be looking for here. And then the last one I wanted to take a look at was Twitter tonight. And Twitter looks like it wants to bounce. I mean, we're getting the divergence that's in here, the divergence on all the indicators now and on everything. And so this looked, again, like move 1 and a big retracement of almost the entire move. Now, if it breaks this low down through here, if it breaks that low, then all this scenario is off, okay? But if that doesn't happen, I'm going to be looking for this trying to turn. I'd like to see a little bit of one close below the blue line and then another close back above it. So I'd like to get a little bit of a pullback and then a move to the upside. Then I'd start to get interested, or if the blue breaks the 21 day. So this is trying to turn, but I'm not ready to try to get on board just yet. So anyway, that's it for today. I'll be back with trade ideas probably out later today, and we'll go from there. This has been Joe for Beyond the Chart. Thanks for stopping by. Tweet it, share it. Talk to you soon.